Hong Kong's Hang Seng was down in overnight trading on Tuesday after the U.S. imposed a 10% tariff on around $200 billion worth of Chinese imports, starting next week. U.S. President Donald Trump threatened to increase this rate to 25% by the start of next year if the two countries failed to agree a deal. This marks the biggest set of tariffs imposed on China so far, with around 6,000 items including handbags, rice, and textiles being targeted. China has vowed to retaliate with its own set of tariffs, marking a dramatic increase in the tensions between the two nations. Trump said in a statement, "I urge China's leaders to take swift action to end their country's unfair trade practices. Hopefully, this trade situation will be resolved, in the end, by myself and President Xi Jinping of China. We have been very clear about the type of changes that need to be made, and we have given China every opportunity to treat us more fairly. A policy mistake of gigantic proportions." Markets and experts react as China hits back at Trump's trade tariffs on the news. The Hang Seng was down 0.3% to 26,846 points, while the rest of Asian stocks appeared to brush off the uncertainty, with the CSI 300 of Shanghai and Shenzhen jumping 1% to 3,235 points. Meanwhile, in Japan, the Nikkei 225 and the Topix were both up in overnight trading 1.5% and 1.9%, respectively. In the currency markets, the U.S. dollar fell sharply against the euro after Trump's announcement and is now 0.07% down, while against the safe haven yen, it is up 0.14%. The U.S. has already slapped tariffs on $50 billion of Chinese goods so far this year, with the latest move coming after months of talks between U.S. and Chinese officials produced little progress, according to the Financial Times. A number of bodies have already issued stark warnings about the threat of an escalating trade war, with the International Monetary Fund (IMF) claiming the world economy could be torn apart in April. Hussein Savyed, chief market strategist at FXTM, commented, "There is no doubt that China's economy will begin feeling the pain given that the U.S. duties now cover almost half of its imports. So, expect to start seeing more aggressive monetary and fiscal actions to reduce the ongoing impact of the trade war." However, it remains unclear to what extent the U.S. economy will be hurt with these tariffs, but definitely corporate and consumer bills will be on the rise in the coming months. Chinese officials have also threatened to walk away from the negotiating table, as they seem to be betting on Republicans losing the midterm elections in November. Investors should be prepared for more short-term downside risks across equity markets given all these uncertainties.